Have you ever been driving through a classic suburban neighborhood and just seen more and more for rent signs? Well, you're not imagining it. There is a huge shift happening in American housing right now, where giant corporations are snapping up thousands upon thousands of single-family homes. So let's dive in and figure out what this really means for all of us.
40%. Just let that number sink in for a second. This is a pretty startling forecast that says by the end of this decade, large institutions could own almost half of all single-family rental homes in the entire country.
So the big question is that forecast, which comes from MetLife Investment Management, even realistic? Is it actually possible for corporations to take over that big a slice of the rental market? That's really the core question we're going to unpack here.
To really put that 40% number into perspective, we're talking about these companies owning roughly 7.6 million homes. That is a gigantic leap from the 700,000 or so they own today. This isn't some small market trend. It's a potential tectonic shift in who owns American homes.
And how is this even possible? Well, follow the money. An absolutely incredible amount of cash is flooding into this market. We're talking $60 billion in just 1 year. That kind of capital lets these companies move way faster and bid way higher than an average family can, and that's what's putting this whole trend into overdrive.
Now, this whole thing isn't just happening in a vacuum. It's really being supercharged by these powerful economic forces that are just making it harder and harder to buy a home, creating what some are now calling a renter nation. I mean, it's the question so many of us are asking, right? It just feels tougher than it's ever been. And the data, well, it confirms that feeling is not just in your head. So what is really going on? This chart right here, it basically tells the entire story. Since the year 2000, median household income has gone up, sure, about 99%. But home prices, they've completely skyrocketed by 156%. That massive widening gap you see between those two bars, that is the affordability crisis in a nutshell. And this has given rise to a whole new concept, structural rentership. This isn't about, choosing to rent for a few years while you save up. No, this describes a deep economic shift where, for a lot of people, renting is becoming a permanent thing because the hurdles to actually owning a home are just too high to clear.
And the financial pressure is just immense. I mean, in a lot of big cities, your monthly mortgage payment would be over 50% higher than your rent. You combine that with mortgage rates around 7% and a historic shortage of homes for sale, and you can see why even people earning six figures are becoming long-term renters.
So as you can imagine, this whole situation has kicked off a huge debate. On one hand is the rise of the corporate landlord killing a core piece of the American dream, or is this just a more modern, maybe even a more efficient way to run the housing market? There are two very, very different ways to look at this. Okay, so in one corner, you have the erosion of the American dream argument. Critics say these companies are snatching up starter homes, which stops middle-class families, especially minority families, from building wealth through homeownership. But in the other corner, you have the modernization of a market view. Proponents of this idea say these big firms are actually better landlords, offering more stability and a higher level of professional service than you might get from a smaller landlord. This quote here from Tim Henderson at State Line really gets to the heart of that first argument. The big concern is that these corporate buyers with your basically unlimited cash are just systematically outbidding regular families for starter homes, and that this is having a much bigger impact on Black and Hispanic families in these high-growth areas. But here's the counterpoint from John Burns of JBREC. He's saying, hey, wait a minute. For the renter, a corporate landlord can mean more stability. You don't have to worry that your landlord is going to wake up one day and decide to sell the house right out from under you. Plus, you get a more professional experience. So, with such a fiery debate, it's no surprise that a lot of myths start to fly around. Let's take a minute to do some myth-busting and actually separate the facts from the fiction by looking at what the data tells us about who's buying and how much they really own. Okay, this is probably going to surprise you. The market for single-family rentals is still overwhelmingly owned by small-time landlords. If you look at the chart, all the big institutional investors combined own less than 5% of these homes. The vast majority, over 96%, are still owned by mom-and-pop investors. So the corporate takeover hasn't really happened yet. But, and this is a huge but, here's the number that explains why this all feels so urgent. While their total ownership is low, institutions now account for over a quarter of all single-family homes purchased in a given year. So you see, it's not about how much they own right now, it's about the incredible blistering speed at which they are buying.
And let's clear up another huge misconception you see all over the internet. You've probably seen the headlines, BlackRock is buying up your neighborhood. But the fact is, giant asset managers like BlackRock and Vanguard, they don't directly buy single-family homes. They invest capital into the specialized real estate firms, companies like Invitation Homes or Progress Residential, and those are the companies actually making the purchases. It's a really important distinction to make.
This map right here shows why the impact feels so massive in certain places. See, the buying isn't spread out evenly across the country. It is hyper-concentrated. In Sunbelt states like Georgia and Arizona, investors recently bought nearly a third of all homes sold. That's why if you live in a city like Atlanta or Phoenix, it can absolutely feel like an invasion.
Okay, so if that's where we are today, where is all of this going? The next phase of this trend could fundamentally change the very idea of homeownership and building wealth in America.
Get ready to hear this term a lot, build to rent. This is the next frontier. Instead of just buying up existing houses, these companies are now building entire brand new neighborhoods of single-family homes from the ground up, with one purpose and one purpose only, to rent them out forever. This slide really lays out their whole strategy. You can see the playbook. Step 1, buy up thousands of existing homes. Step 2, use complex financial tools to bundle up all the future rent payments and sell them off as a bond. That frees up a ton of cash to go buy even more homes. And now step 3, just skip the middleman and build entire rental communities from scratch. It's a perfectly scalable machine. And this has some really profound consequences for wealth in this country. Think about it. In the past, owning a home was the #1 way middle-class families built wealth to pass on to their kids. Now, institutions are capturing that home appreciation instead. And in the future, this completely breaks that cycle of intergenerational wealth, which could make it that much harder for the next generation to ever own a home. Just take a second and look at that number. $4.7 trillion. That's the value of the single-family rental sector today. And it has doubled in just the last 10 years. That is a staggering amount of wealth that used to be sitting in the equity of individual family homes and is now flowing to corporate shareholders instead.
So at the end of the day, it really all boils down to this one big question. Is the single-family home, which for generations was the cornerstone of the American dream, a family's nest egg, is it now just becoming another asset class on a Wall Street balance sheet, no different from a stock or a bond? And what happens to our neighborhoods when the places we call home are treated just like any other financial instrument?